I did want to do a quick favor report here and hit an M&A situation, a contested one that we didn't get to. I didn't get to because I actually was out on the day that the initial bid was made. I'm talking about CoreLogic, and the reason I mentioned it this morning is because we've gotten a response from the board of directors at the company to that offer that was received back on June 26 from Cannae Holdings and Senator Investment Group. They'd offered to buy the company for $65 a share. At the time, they'd actually said they owned 15%. They really only owned 12% prior to when they went public with their offer. Essentially, an unsolicited offer is what it was or is. And then they bought another 3% in the market, something that actually CoreLogic makes note of in their letter this morning. They purchased stock, in fact, above their own price. They offer 65, but they did buy stock as high as 68 to get them to that 15%. Why? Well, CoreLogic says the reason that they actually did so and had to rush it was because we increased our guidance the day before and the stock would have been up, and therefore the unaffected stock price would also have been impacted, making, of course, the premium of that 65 look a lot smaller. But they go into a lot more detail than just that as to why they unanimously reject what they call an opportunistic acquisition proposal from Senator and Cannae this morning. They go into say as well that the companies are experienced, that is Senator and Cannae are experienced investors who have an understanding of our business and our industry. They know CoreLogic has transformed its business model, is generating significant momentum, and has a wealth of opportunities across its business. Go on to say their proposal is opportunistically timed to acquire CoreLogic at a low valuation and then take all the upside that is rightfully yours. Very important here. The company has, and in fact, we don't see this very often in this market, but they have given us both increased their current year guidance and given us guidance for 2021 and 2022. Looking for revenue of between 1.9 and 1.95 billion in 2021, and adjusted EBITDA of 595. Well, yeah, there you see it, to $615 million, and again an increase into 2022 as well, both for revenue and for adjusted EBITDA. And also EPS there. So a significant rejection this morning. By the way, they also do say it raises serious regulatory concerns as well. Always note that, because when you do see that from a company, it typically means they're willing to go to the mat. They do put in a poison pill. This was remains a defenseless company. You can act by written consent. You call a special meeting with as little as, I think it's 10%. So very much open for shareholders if, in fact, they felt that this was an appropriate offer for the company. Very much unclear whether, in fact, those shareholders will feel that's the case. You can see the stock is still trading well above. Now, CoreLogic will tell you, well, it's starting to trade where it should be based on the fundamentals because we've just increased our guidance substantially. It is a market without a great deal of mergers and acquisitions, one without a great deal of contested situations. This is, of course, one of them, and we did want to update our viewers on that, Carl.